Thank you for joining us. Welcome to Business Incorporated live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the show today, Moody's pushes back South Africa credit rating decision. Egyptians hungry and angry as currency plunge sends food prices soaring. Plus, new industrial parks in Senegal eye Chinese firms. Let's get started. Of course, Moody's rating agency says it will not issue a sovereign credit rating decision on South Africa this Friday as previously planned, but will do so after a review that could take 30 to 90 days. Moody's announced on Monday that it had placed South Africa on a review for a downgrade after a cabinet reshuffle that saw a respected former finance minister dismissed from his post. This comes after S&P Global Ratings downgraded South Africa's sovereign credit rating to BB+ from BBB- grade, saying the recent firing of its internationally respected finance minister posed a risk to fiscal policy. S&P assigned South Africa a negative outlook, saying this reflected its view that political risks will remain high this year and that policy shifts are likely, which could undermine fiscal and growth outcomes more than currently projected. A downgrade to junk would increase South Africa's debt servicing costs, seen at 144 billion rand in the 2016-2017 fiscal year. And to the markets here in Africa, the markets are all looking green at intraday. The South African market was up 0.71% despite the credit rating downgrade by S&P. However, South Africa's rand and bonds tumbled sharply after S&P Global Ratings cut the country's credit rating to junk. Egypt is the best performer, up 1.42%. Here in Nigeria, the market was trading up at midday by 0.12%. Nairobi closed 0.76% on Monday. In the Middle East, the Abu Dhabi stock market index outperformed at intraday in otherwise light trading around the region. Shares of recently merged First Abu Dhabi Bank were up 2.4%, helping lift Abu Dhabi's index 0.84% higher. Dubai's index were up 0.58%, with the majority of trade focused on small to mid-sized shares. In Qatar, the index was down 0.1% in early trade as shares of Qatar International Islamic Bank dropped 5.9% as they went ex-dividend. However, the index reversed at intraday to trade higher at 0.46%. Saudi Arabia's index barely moved, with 56 shares declining and 44 advancing. And in Europe, investors are focused on an upcoming meeting between U.S. President Donald Trump and China's President Xi Jinping. Political uncertainty is also playing a role. Let's talk to Janelle Dumalon, my colleague at the Frankfurt Stock Exchange, for details. Good afternoon, Janelle. Thank you very much for joining us. Well, European stock markets are entering day 2 of negative positions. Although looking behind you there, I can see the ding-dong movement of the DAX. But tell us, what flip are the markets looking for?
Hi. No, that's actually a really good question. Now, because weak trading across European indices today are attributable, of course, to a lot of factors, but chief of them seem to be a weak car sales report coming from the U.S., a weak car sales report for March, that is. Now, that report has sent auto stocks spiraling downward, taking the DAX along with it, as you can see behind me and as you've already pointed out. And, of course, European stocks as well. This is a European phenomenon. Now, if I could talk a little bit more about the car industry, just because of how big an influence it's had on today's trading day, it's been a big enough influence to drag the DAX away from record highs, as we've already pointed out. But today, especially, EU lawmakers have voted on tighter rules governing new car approvals and giving the EU more oversight in terms of emissions cheating. And this is, of course, a result of the emissions cheating scandal that broke at Volkswagen in 2015. Now, the new rules dictate that that the car industry in Europe would be subject to more fines, more oversight from the EU. The EU would be allowed to slap erring car makers with fines of up to 30,000 euros per vehicle. And they would also be tackling the perceived conflict of interest between regulators and national car makers. National governments would have to fund exhaust testing centers instead of the car makers as what was previously done. Now, of course, this is a single aspect, and the negative positions are, of course, influenced by investor hesitation surrounding a lot of key events happening this week. Like you already mentioned, there is that meeting between President Donald Trump and Chinese Premier Xi Jinping. We're also awaiting the release of the latest Fed minutes and U.S. jobs data on Friday. So investors are waiting on all this information, and we might see some movement in the market that has digested this information by the end of the week.
Now, aside from those political uncertainties you've just railed out there, on Tuesday's calendar is the release of the UK latest PMI construction data. We also have the Eurozone latest retail sales and, of course, the US factory orders. These are the economic data coming in today. Do you think traders and investors will digest these data for near to medium-term trading actions?
You know, that is actually less clear. Now, British construction data, for example, showed that it slowed down a bit in March, but that actually had little impact on Britain's FTSE, which has been outperforming the, let's say, Shire European indices today. And in terms of the Eurozone's latest retail sales, we also saw a growth there of about 0.7% in February, which compared to the previous month, and that was, of course, trumping analyst estimates who were expecting a lower growth figure. Now, food, drink, and tobacco products only showed a modest jump, while clothes and shoes showed a much more significant jump at 2.2%. So this is something that might actually be interesting for investors, although, of course, they are aware of expert opinions that say that rising inflation here in the Eurozone just might do its part to dampen consumer sentiment. So they will be taking that into account. Now, factory